outperforming today with the Nasdaq up 0.5%, helped along by Nvidia, which rose nearly 5% after announcing a new suite of AI chips over the weekend and closing out its own record high. Joining us now is T. Rowe Price, Global Technology Fund Portfolio Manager, Dom Rizzo. Nvidia is the fund's largest holding. So naturally, Dom, we're going to start the conversation there, especially as we have seen this bifurcation between semiconductors and software in this new AI era and investor skepticism about where the money's flowing right now, at least in the near term.
First off, great to see you, Morgan. Yeah, I think Computex laid out a lot of really interesting innovations that's happening all across AI this weekend, whether it's AI in the data center and the one-year refresh cycles that we're going to see out of Nvidia and AMD, or it's AI at the edge and the AI PCs that we're going to see. But look, if we look at this earnings season, as you know, we've been bullish digital semis and bullish on Nvidia throughout the entire year. And I think we've seen a few thesis confirming data points. First off, and probably most importantly, hyperscale CapEx is probably going to be up close to 50% this year. A lot of that is flowing into Nvidia. And if we look at the Nvidia earnings numbers, you know, the street started the year estimating that in fiscal 26, Nvidia would earn roughly $23 in earnings per share. Now that number's $33. So we've seen the earnings beats come through to prove it. And so the stock's trading at roughly 33 times earnings, which I think is a pretty reasonable multiple.
So we were just having this conversation earlier in the show, and that is this idea of Nvidia being the Magnificent One. Forget Magnificent Seven. Nvidia is sort of in a class of its own right now. Do you see it the same way? Or is it time to, especially as we do see the headlines coming out of Computex, for example, is it time to start to diversify away and make bets in other places as well?
Well, there's two kind of different pieces to this. One is the entire digital semi ecosystem, and that continues to benefit from Nvidia doing so well. These are names like TSM, Samsung, Integris, and even AMD. I think the market's big enough for both of them. You know, we're talking about a $400 billion AI chip market. Nvidia will be the leader, but I think AMD has a real opportunity to be a credible second source. But when we look at software and we see some of the things that happened this earnings season, we saw really small revenue misses in guidance result in meaningful stock price reactions. So we saw Salesforce.com, less than a 1% move in their guidance resulted in a 20% move in the stock. And I think that tells you a few things. It tells you something about positioning, it tells you something about valuations, but it also tells you something about what people are worried about, which is terminal value risk and what AI means for the software ecosystem.
Well, so I wanted to ask you more about that because you like ServiceNow. ServiceNow right now, after last week, now its earnings were pretty strong. It didn't report last week, but ServiceNow is at 6-month lows right now. It's in the middle of the 12-month range as people got freaked out about Salesforce and others. You also like SAP. That hasn't run as much, but it's also off the highs. So is that a rational reaction based on how high some of these software stocks have gotten, or is there something else going on? Because you look at the WCLD, it's down around 30 right now, and so many of the smaller software stocks that supposedly have multi-cloud or AI promise are not performing well at all.
Yeah, I think the question that's happening in software right now is really at that high-end application layer, right? What does AI mean for a Salesforce or an Adobe? The difference with ServiceNow, it really is a platform company, right? The platform of platforms, as Bill likes to say. And many of those AI apps are going to be built on top of the ServiceNow platform. And ServiceNow offers companies a really clear ROI out the gate, unlike many other software that you could see. And so that's why we haven't seen the crowding out effect from GPU spend hit ServiceNow like we've seen at other application software companies. But yeah, no, the IGV, the software index, has struggled a bit, and we've seen it derate from 9 times sales 3 years ago to 7 times today.